Hello everyone, my name is Tianyu Yang, and I'm from the University of Michigan's Ross Business School. And today I want to discuss about a very important aspect of stock trading, especially for short-term traders and option traders, which is analyzing the stock trend in very short term, a week or just for intraday trading. My major motivation to study this subject is that for high frequency stock traders and option traders, trend analysis inside a single trading day can be much more important than just knowing the opening and closing price. Since if we are in a bullish market, the stock keeps climbing for 5 days, which is the closing price is always greater than the opening price. You are not certain that you can profit from trading options in each day. But however, if in a bearish market, you can still have a lot of profiting opportunities in each day if you can have a good stance of the market's direction inside a single day. And whether you are in a bullish, bearish, or volatile market, the probability that the market trend will suddenly change in tomorrow or even next week or even next month is very low. But under the same market condition, the stock trend in a single day can always be highly uncertain. Since if you ask me if the Nasdaq index will be higher than the current level in 1 year or 2 years, I believe 80% people will answer yes, since the Nasdaq index has been climbing for more than 10 years, and during most months or most years. So in the long term, the market is definitely going up, but in every month, every week, or every single day, the stock trend can be highly uncertain. That's why we definitely want to study. We definitely want to study it, and especially for professional investors, applying different algorithms. So you must have a solid set of have a solid understanding of the market behavior in order to develop an efficient and profitable algorithm. And also, although the stock prices are highly unpredictable, but an important factor that you can control is that you can know the opening price of each day a lot earlier than the market opens, since the pre-market starts at 4 a.m. at Eastern time, and by 8 a.m. you should approximately know where the opening price of today will be for your stock and for Nasdaq, for Dow Jones, and whatever. So you will have a lot of time to think about how you are gonna trade after the market opens, and if there are some major events happening to today. And also inside a single trading day, some patterns can symbolize a trend being stronger or being a trend reversal. That's why we would definitely want to study how the stock goes inside one single trading day. It can be a lot of fun and very risky, but also very profitable. So in this presentation, I used a set of data, which is the data of Amazon stock price from July 26th of 2016 to April 28th of 2017, which is, during this part, it is a pretty common period in the Nasdaq market. It is not especially bullish and it is not very volatile. It is just a very typical segment of Nasdaq from the past 10 years. And the opening price of Amazon at the first day is about $378, and the closing price at the last day of this time frame is about $925, which is a 25% gain. This should make sense since the share price of Amazon is climbing even faster after 2017. And during this period, the Nasdaq Composite Index grows from approximately 5,150 to 6,050, which is a 17.5% gain. It is slightly lower than our underlying asset, but however, since we know that in the long term, Amazon stock is behaving is always outperforming the Nasdaq Composite Index, so this should be a pretty reasonable result, and this data should be very representative of a typical year in the Nasdaq. For example, if you ask me when what the Nasdaq market will be like in 2020 or 2025, it is it's very likely that the market will look like this. So analyzing this data can be quite representative. And during this period, there are 183 trading days, and about 3 or 4 is missing, but I think it should be fine. And then I want to mention that the strategy for people with different trading strategies can be different. So there are a lot of people that holds that always sells options or holds some non-directional option strategies. In this part we assume that everyone maintains a bullish outlook of the stock, since this is also the long-term trend in the American stock market. People who hold direction neutral or bearish option positions are not considered in my presentation, since we want to only consider people that have the same thoughts as common stockholders does. That is, we want the stock to climb, we want the market to be bullish, which is also what most people think. So we will be considered 3 kinds of people: the stock buyer, which is we just hope the stock to remain at the same level or to climb to higher prices; the call buyers, which is they want to hold the option for as less time as possible, since they are always suffering from time decays. Especially for people holding some short-term out of the money calls and hoping that the underlying asset can have a strong climb in recent days. They definitely want to sell their asset if as long as there doesn't seem to have such a trend. And also we consider the put sellers and holder of bullish put or call spreads. That is, by doing this kind of option strategies, we are benefiting from the time decay as long as we are profiting from this option position. So we would definitely not want to close our position if the stock stays at the same level or the stock is climbing. So the different goals for analyzing the intraday stock trend is also very different. Some people would mainly want to not avoid missing the major profit inside the trading day. So by doing this, they need to hold their asset for longer time after the market opens, which means this is more aggressive and more risky. And uh, a lot of other people just want to avoid suffering from a larger loss inside the trading day, which means they need to take more conservative option strategies. And for people holding the long position of options, they definitely want to avoid the time decay effect. So people with different goals should be analyzing their intraday trading strategies in a different way. And so please note that my during this presentation, it lacks enough theoretical basis. It is very empirical and very subjective. It might be it's mostly based on my understanding of day trading and my understanding of the stock behavior, and it is empirical because I just use some small amount of data to perform this analysis. It lacks enough sample size for our conclusions to be statistically significant. So there's not the confidence interval shall be very large, and we cannot say to what exact probability level that we can benefit from using this strategy, but we can only have a crude stance of how the market will behave under if you see what signal. And also, however, from my personal experience of intraday trading orders of stocks and options, it should be more than 1,000. Results of this analysis is quite reasonable. It matches my understanding of the stock market inside the trading day. However, even though this is the case, this analysis shall in no way affect your intuition and judgment when you place your day trading orders. When you perform day trading, the current market direction, the trend, and the news for a specific stock, and also your personal experience are always more important than using some empirical data and some other technical analysis skills. The market and the trend and your own intuition is always a best tool. So we'll begin analyzing the Amazon's stock price in approximately 180 trading days. Since we are able to see the opening price of the stock a long time before the market opens, so I will categorize these data by different patterns at opening at the initial about 10 or 15 minutes or half an hour of the market. There should be 7 categories in all, and for each categories I will discuss in detail to what probability that each situation can occur. For the first category, I will classify this as the stock opens at a high level, which is for Amazon stock it opens with at least 0.5% or $4 up. Since the Amazon stock price at that time is about $700 to $900, now it's definitely not $4. So there are 31 occurrences which is about 1/6 of time when you can see the stock opens high. I believe this matches our intuition. Even though in a bullish market, this is not very, this shall not be very often and happen at most 2 times in a 5-day trading week. So the 0.5% or so is based on the volatility of your underlying asset. You should always know and categorize what percentage gain at opening is considered high for your underlying asset. So if Amazon gains 3% in a single day, the short-term cost can go up by 200%. But if a Tesla stock gains 3%, the same short-term out of the money call might just go up by 40%, because Amazon stock has a much lower volatility and is quite close, I believe, quite close to the Nasdaq index. So a 0.5% up can be attributed as a high open level. So during the 31 cases, there are 12 cases that the stock ended up closing with a much lower price, which is, you can see that the stock keeps going down and closing at a much lower price, and most of them even lower than the previous day's closing price. And these are the 12 cases that the stock closes at a much lower price. Okay, and during this graph, I marked this because in this day the stock opens especially high, which is more than 3% climb. So if this happens, you are definitely selling all of your asset. And for others, we will analyze it later. So this is our analysis. So during these 12 cases, there are 7 cases that the stock immediately falls, and the stock always trades at lower price than the opening price. And there are 2 cases that the stock stays around opening price for about less than 15 minutes. And there are 3 cases that the stock stays around the opening price for more than 40 minutes or to an hour. And however, since this has been a relatively long time, and since the stock opens high, you may want to sell some of your asset, but you are definitely not selling all of your asset. If these 3 cases happen, we see that the stock will definitely trade at an apparently lower price than the opening price at about 10:25 to 10:45 a.m. You can see that at these times the stock price has already dropped to below the opening price, and that should be about 1 hour later from the stock market opens. And in this case, there are 11 cases that the stock ended up closing at a much higher price than the opening. That means an especially bullish market has occurred, and you can see that there is almost same probability that the stock will close with higher price than the stock closes with a much lower price. So please take a look at these 11 cases and make a sense of how they are behaving. Okay, so in this case, 9 out of the 11 occurrences, and the stock price is always trading at higher price than the opening price, which is almost a certain case. But however, there are 2 cases that the stock dips after opening. You can see there are 2 cases that the stock dips after opening. In these two cases, the stock dips about 60% and 45% of the initial gain at the opening, or about 0.8% and 0.54% in terms of the stock's previous close price. And however, we can determine that the stock has recovered to the opening price around 955, or this one recovers at a very much later time, which is about 11 a.m. So we will analyze this also with the previous case later. And among these 31 cases, there are 8 cases that the stock closes with a similar price than at the previous trading day. And we can see that in this case, the stock becomes much more volatile, and they are much less predictable. Please take a look at these 8 stock graphs and make a sense of how their behavior should be. Okay, so in this is one of the most unpredictable cases after a high opening. So 3 out of the 8 cases, the stock stays around the opening price before about 10:20, and there are 4 out of the 8 cases that you can see an apparent downtrend by 10:20, and however, one of them returned to the opening price at around 12 o'clock, and others returned to the opening price at a very late time. You can see that in these 4 cases, initially the stock is experiencing a very volatile or even a straight downtrend. However, this is the only one that returns to the opening price at around 12 o'clock, and the others return at almost close to the market closes, almost after 3 p.m. So this one can be highly unpredictable, and there's 1 out of the 8 cases that the stock stays to be very volatile by 10:20. However, it returns to the opening price at around 11 to 11:10. This is the opening price, and this is when it returns to the opening price, which is almost 1.5 hours later. So this is our diagram of how we can approximately trade in the if the stock opens with a high, if the stock has a high open case, and at 9:30 the stock opens with more than 0.5% gain, which is our 31 cases, and we can then divide it into 3 cases. You can see an apparent downtrend. You can see the stock climbs and always stays at a higher price than the opening, and the stock stays around the opening. If you can see an apparent downtrend by 9:45 p.m., 9:45 a.m., then you have a 7 out of 13%, 7 out of 13 probability that the stock can close with much lower price. You have a 4 out of 13 probability that the stock closes around the opening price, and you have a 2 out of 13 probability that the stock closes with a much higher price. And out of the two cases, you return to one of them return to the opening price at 9:55, and one of them return at 11, which is, we will consider this as an outlier, since we definitely don't want to miss the majority of our profit or suffer from bigger loss by waiting the stock to go back until 11 a.m. And so for these four cases, the stock price returns to the opening price at very late time, since so it can be very unpredictable. So our strategy is that we sell most our asset by 9:45, and our deadline is 10 a.m. So if you see an apparent downtrend after a high opening, and our deadline to sell most our asset is about 10 a.m. and the probability that we can success in this case is 8 out of 13, which is should be a pretty reliable strategy. And for the second case, if the stock climbs and always stays at a higher price than opening, 9 out of the 10 cases that it closes with a much higher price, and out of the 10 cases that it closes around opening. So our strategy is just to keep all of your assets, no matter your stock, your call, or your bullish spread, since it is very unlikely that your asset will be losing in value. So since if you can imagine that the stock already opens at a very high level, and the stock still climbs for more than 15 minutes after the market opens, this can mean a very strong market trend, and you are definitely not selling any of your asset unless you are very conservative. And our third case is that the stock stays around opening until 9:45 p.m., 9:45 a.m. And under this case, there are 5 out of 8 probability that the stock closes at a much lower price, and there are 3 out of 8 probability that the stock closes around opening. And out of these 5 cases, there are 3 cases that the stock apparently trades at apparently lower price than opening at about 10:25 to 10:45 a.m. And there are 2 out of 5 probability that stock trades at lower price immediately after the 9:40 to 9:45 a.m. And out of these 3 cases that the stock closes around opening, all of these 3 cases, the stock price still remains around the opening price at 10:20 a.m. So our strategy for this case should be that if you see a lower price after 9:45, after the case that the stock stays around opening price until 9:45 a.m. If you see a much lower price, or if you see a stock price drop after 9:45, you should sell them immediately. Or if you see a lower price at 10:30, you should also sell them. And if you still see the stock price to be around the opening price at 10:30, then you should keep all of your assets, especially your short-term long calls, which means you will suffer from a lot of time decay. If you are holding something that's not suffering from time decay or even benefiting from time decay, you will definitely keep your asset. So this is our case. If you see a lower price after 9:45, you sell all of your asset. And if you your deadline to wait is until about 10:30. If you didn't see the share an apparent share drop by 10:30, then you're likely to keep your asset. Our success rate in this case is 7 out of 8, which I also believe to be a reliable strategy. So this is our analysis for if the stock opens at a high level. There are three other cases that the stock approximately opens at around a 0.5% gain. We can see that in the first case, the stock sees an apparent downtrend by 9:45, and we are selling them immediately. And at last, the stock returns to around the previous close price. And for the second case, it's also an apparent downtrend by 9:45. And for the third case, is the stock is pretty volatile at when the market opens, and you see a apparent uptrend in the market by 9:45, and it approximately it didn't return to opening by about 10 a.m. So according to our algorithm, we are keeping this stock. So this trend tends to be pretty bullish, since you see that before the market closes, it has an apparent uptrend. So if you are holding a call option or selling a put option at this time, you can benefit a lot from this part. So you will definitely not lose value from doing this trade. Our second category is that the stock opens with at least 0.4% or $3 down, which can be attributed as a low opening. Since overall speaking, the market is bullish, so the probability that the market opens very low shall be less than the probability that the stock opens high, and the magnitude to which the stock opens below the previous close price is also less than the high opens magnitude. So there are 21 occurrences for this case in all, and let's take a look. We can see that only 4 out of the 21 cases that the stock closes with a much higher price than the opening price, and we can see that among these four trends, we should see even though the trend as the market opens is not very apparent, we should be able to see the stock price being held to a specific level, being bounded to a range, or we should see an apparent uptrend by about 10:40 a.m. We can see that the stock is apparently raised to a much higher level by 10:40 a.m. For more than half of this low opening case, the stock ended up closing around the opening price. So we can see that these are the cases that the stock opens slow and is unable to recover. Please take a look at these 11 diagrams. Please note that in the first 2 diagrams, the stock quickly climbs to around the previous closing price, and then its momentum is unable to support it to climb further higher, and the stock immediately drops gradually uh, to even below its opening price. And we can see that the peak stock price, and when the stock price climbs to above the previous closing price, is around occurs at around 10:30 to 10:40 a.m. For the other cases, it looks pretty similar. Some of them is you see that this can be a very disastrous day. The share price is opened by at least a 4% down, and this is almost a 5% down. And as this case, if this happens, there isn't much things you can do. You will definitely not expect the share price to recover. Just sell your asset and wait for the next opening. This is why we trade stocks, since it is rewarding, but it's also very risky. You will not want to trade large positions with one underlying asset, so that you can avoid the tail risk to happen. So if a major stock disaster happens, or if a major disastrous news happen to Amazon stock, then this can happen, and there's nothing you can do about this. You would definitely not want these events to blow out your account. So even though Amazon stock price is very expensive, you shall not have a whole lot of your portfolio trading stocks and options with such an expensive stock. And for these cases, the stock kind of gradually climbs after an initial dip in the market, and which is you might believe that there is half the probability that this can occur after you see a low opening, yeah. Okay, so another 6 cases, the stock closes with a lower price, apparently lower price than the opening price. You can see that this is an especially disastrous day in the market, and this is also a bad day. So there's quite a large probability that the stock will keep descending after a disastrous event happens, and or even in a normal day that the stock price opens at a low level, it is quite likely to happen. So based on this case, our strategy is that when you see that the stock is gonna open at a very low level, sell immediately at the opening by placing the limit orders. If you are holding stocks, just hold the stock, just set an order to the prices which is to the lowest price you see in the pre-market trading from 9 to 9:30 a.m. Keep an eye on the pre-market price from 9 to 9:30 a.m. For example, now Amazon stock is at 100. It's about $1,800, and during the pre-market price, you can see the stock changes from 1798, 1794, and it should be changing within a small range, but whenever you see the lowest price to be, you set your limit sell order to be that price, and it is very likely that the opening price will be low, but still a little bit higher than your limit sell order. so that your order can be filled. And if you are selling options, no, if you are holding long positions of options, or you are writing a put option, then you may want to estimate what the option price will be at when the market opens, and try to fill a sell order, and or buying back the short put order. Or if you are unable to make a good estimate of the option price, just wait for the market to open and close your position as soon as possible. So the market will not drop so sharply during the first 1 or 2 minutes, but just make sure you are trading a really liquid stock, and you are feeling the price to be at the lower bound of the bid-ask spread, so that your order can be filled very quickly, and there's no need for you to repeat your action. Or this strategy can have a successful rate at 17 out of 21. Or we can hold the stock until it's around 10:30 to 10:40 to see that if there are any probability of the stock going up. And so if you see and based on your observations from the opening price to 10:30 or 10:40, we can see that if you see a gradual uptrend, you will definitely want to hold your stock, and you expect that to return to previous close price, or even close to that. Or if you see a quick uptrend to previous opening price, and the stock cannot go further up, like this kind of behavior, and it quickly goes to the previous close price and then immediately drops. If this happens, then you would like to sell your asset immediately. There's no need for you to wait. This is definitely the time that you sell your asset, or you can purchase a put option at the time it goes up, at the time it goes to the top around the previous day's closing price, and so that your direction can be neutral, and the put option can hedge your asset and provide you with, or even provide you with some of the profit. Okay, so the third category is that the next several categories is that the stock opens around the previous close price, which is for Amazon stock at this year's, it should be within $3. Should be within $3 around the previous close price, and you can see an uptrend and almost always higher price than the opening in the first half an hour, which is if the stock opens around the previous closing price, you are definitely not selling your asset, or you are purchasing even more asset. You are definitely keeping all your asset, and you wait for changes in the share price. So our waiting time should be approximately half an hour. So there are 30 occurrences that this case can happen, and we are taking a look into this. For 18 out of the 30 cases, the stock will close with a much higher price. And please take a look at these stock prices, these stock trends behavior, and we can see that this is a very optimistic result, and we always hope this to happen. And actually, from my trading experiences, the days that the Nasdaq the Nasdaq market gains the most amount is when the stock market opens around its previous close price, and is followed by a continuous uptrend to a 3% or even higher increase before the market closes. So this case can be can have very much potential. So definitely not don't sell your asset when the market opens, and wait for what to happen. Please take a look at these 18 cases about how the stock prices behave. So in some of these cases, the stock price can be very volatile, but you can see that the stock prices haven't dropped to much lower than the opening price. So you are definitely not selling your asset if you experience these dips and this kind of dip, or this kind of dip. If the if the dip didn't go below the opening price or previous day's closing price, then you're definitely not selling your asset. Just keep it, and it's for oftentimes it's just an overreaction. It's just an overreaction of the market, and you can wait for the recover and even stronger trend after that to happen. During 12 out of the 30 cases, the stock closes around the opening price, and you can see that there's an initial uptrend, very very powerful, and it climbs to a specific level, and it then drops. And some of them move at a very big amplitude, but some of them it stays at a relatively small range. So if we are holding a short option position, or we are purchasing the stock, then we definitely want to keep our asset. We are not selling any of those, and if we are having a long option position, we might consider selling the contract when we believe it has reached the top. We see that in these cases, the share price reaches the top at around 11 or to 11:30, but however for these cases, it reaches the top price after in the afternoon. So it is uncertain to make a judgment of when it's hitting the top price, but if we are keeping our asset, it is quite likely that we are profiting from it, and we are not very much suffering from the loss. And for this case, if you see a downward channel has already formed, and it has dropped to the previous opening price, I believe most people, including me, will be selling their asset. And if for me, I will definitely sell my asset if it dips to around the previous day's closing price, or if it dips to below the previous day's closing price for the second time. I should be clear that the momentum is not enough, and even if it climbs back, I don't feel regretful about these things. you can never predict what will happen. And yeah, also for this case, if it goes to below the opening price, I'm definitely selling my asset. And for this, the trend is even stronger. So I might consider selling most of my asset at this time. So our strategy for this case shall be, there's not many things we can do, but our strategy can be simpler than our previous cases. So the strategy shall be just holding all the assets after market opens. This is the first thing we need to do after the market opens. And for these cases we just mentioned, please make the judgment using your own experience, your own judgment, and the market trend. And our further strategy is that we hold all the assets till 11 a.m. And after that, we shall sell the asset if we see a big drop in the share price. An approximate magnitude to which that I want to sell my stock after I see a fall after that is that I'm selling my asset if the stock price falls about 1/3 of the difference between the opening price and the highest price of the day. Since we see that in this case it has rises to this point, and after I see that it drops about 1/3, I'm definitely selling my asset. Since this can, from technical analysis, this can be a very bearish trend. And also for this, if it drops to this part, firstly, I'm definitely holding my asset to this point, since this dip didn't exceed the opening price, and this is an upward channel. I'm definitely keeping my asset, and I might consider selling all my asset after I see that it drops to this point. And for this part, I'm definitely keeping my asset until this point, and I might sell my asset in here. So if you apply this rule to each of these cases, we can consider that we can see that this strategy can be successful in all of these 8 cases. So this, I believe this can be a quite reliable strategy. So after you hold your asset to market opens, if you didn't see the stock price to drop to below the previous day's share price, you keep it, and you wait for it to go to its highest point, and after that, if the stock has fallen about 1/3 of the difference between the opening price and the highest price you observed, you sell your asset, you sell your stock, and wait for the market close. Wait for before the market close to buy back your asset. The fourth category is that the stock opens around the previous closing price within $3, and you observe an immediate downtrend, or you see a downward channel after the market opens. There are also about 1/6 probability that this case can happen. Among these 30 occurrences, there are 16 cases that the stock price is unable to recover, and there are 14 cases that the stock price gradually climbs back. So we can see that this is again a half and half probability event. So we need to determine what we want to do about this. So please take a look at the cases about how the stock prices behave when it's unable to recover. There are 16 cases when this happens. Okay, so these are the 14 cases that the stock gradually climbs back. Mm, we can see that some of them are highly unpredictable. For example, this one and this one. So, but however, mm, there are some cases that it is you can you can observe a you can observe a trend reversal point, and you can be able to determine it since at this point the stock price has dropped about 0.5% from the opening, no, from previous close, and has dropped about 0.8% from this highest point. So if the market has no no especially bearish news or no especially a bearish event happening, this can be a pretty the market shall not dip about more than 1% for Nasdaq and for stocks with volatility similar to a Nasdaq index, like an Amazon stock. So, if you see a trend reversal at this point, you may definitely expect this to reverse the trend, and this show all based on the current day's market direction and your own intuition. Please take a look at these 14 graphs that the stock gradually climbs back. Okay, so after knowing this, there are not much things that can be done about this situation. So after you see that the market has a downtrend immediately after the market opens, if your sell order can be filled as soon as the market opens, then you are lucky and it's a good case. But however, since there's almost half of the probability that the stock can climb back, you must apply your reasonable judgment to determine if this situation is if this downward situation is affected by a major event, such as a bad day in the whole Nasdaq and Dow Jones, NYSE market, etc., or it should be just an overreaction caused by overselling for the market or just for your single stock. And if the later one is the case, then you should add your position or shares as quickly as possible. As quickly as possible when you believe that the stock price starts to recover. You shall be brave and you shall be quick to do this, since there's if you are a retail trader, you're trading at a you're definitely taking at least several seconds to place order and fill orders, and the institutional traders and are using computers with very high power, and they're definitely doing it sooner than you can. So if you expect the stock price start to recover, do it as soon as possible, so that you can even if you fail, don't be regretful about this, and make a stop loss when you believe it's necessary to do so. That's why I always say that we should always trade with small positions, so that you'll be flexible to adjust. If you are purchasing shares or options of a stock like Amazon, if you are using very large positions, you are adding your position or closing your position can be a very large impact to your whole portfolio. So always trade with small positions, so your flexible to make adjustments to your positions. The fifth category is that the stock opens around the previous closing price within $3, and after that, the stock initially goes down and then forms a bottom reversal shape, like a V shape, after the market opens. And by saying the V shape, I'm saying that the stock dips and rises. Dips and rises at least to the opening price. There are 26 occurrences, and for this case, and 18 of them, the stock closes with a higher price than the opening, and for 8 of them, it closes with a similar or a little bit lower price than the opening. So we see that by opening around the previous closing price and forming a V-shaped bottom reversal pattern, this shall be a pretty bullish trend after you see that the market opens. So this case can be pretty much predictable. Please take a look at this 18 pattern that a V shape is formed when the market opens, and the stock gradually climbs to pretty high level. After that, the stock either maintains at a high level or it starts going down for a little bit. You can determine if you keep your asset or you sell your asset after you think that it reaches the highest point. Please take a look at the 18 cases that the stock prices keeps going up after an initial V shape after the market opens. Please note that some of them form the V shape around 10 or 15 minutes, but however for this case it takes about 30 minutes or even 40 minutes to do so. However, since it has not dropped to the previous closing price, which is not especially bearish if the stock is just opening at $3 or $4 beyond the previous closing price. If it has not dropped to below the previous closing price, we are definitely not selling the stock. So we are keeping it, and we ultimately see the V shape to form. So some of them have the V shape greater than the previous cases, but it turned out to be that it's not their trend is bigger, but their overall movement in the day is smaller. Since you can see that this is only a $4 change, and this is about $5, and none of these exceed a $5 change. So we can see that by doing you must make sense of the volatility of your underlying asset. So if you see that a $4 downtrend has happened, are you gonna stop loss or you're gonna keep it? However, for this case, I believe most people are stopping their loss, but this is about a 1%. No, this is about a 0.6% decrease from the previous closing price. So I believe that according to our principle, we are not closing our position, we are not selling our asset. We are definitely waiting for it to recover. And the cases, indeed, all of them recover from the dip, and a 0.6% or 0.7% or dip in the impedance share price or the Nasdaq index can be considered a pretty common retracement in a volatile day or even in a bullish market day. So just make sure to hold it, and as long as it didn't hit your stop loss level, hold the stock and wait for it to recover. So please take a look at the 8 cases that the stock ended up closing at a much lower level than the option than the opening price. We shall notice that for these cases the market is very less predictable, since you can see that these patterns are highly unpredictable. However, please note that this is only 8 cases out of the 26, so it's not a very troublesome event. And also, in each of the cases, none of the stock ended up closing with more than 1% drop from the previous day's closing price. So, as long as you don't have a very large position in your portfolio about this stock, then it shouldn't be a big impact to your portfolio value. Please take a look at these 8 cases. These 2 are even more unpredictable. Okay, so for these 8 cases, something in common is that you will see a clear drop in the share price before middle of the day. Even though they have formed a V shape, from a bottom reversal shape at the beginning, you would expect to see that the share prices have already dropped by the middle of the day, say 12:30 or 12:45 p.m., which it either dips to below the previous closing price or below the current day's opening price, or the most amount gained in the day. For example, for these cases, it has dipped the most amount gained in the day. Yeah. So when you see this, you should sell some of your asset or close some of your bullish option position. And the next thing is just to wait for it, since none of them can be a major can really harm your portfolio, since it is not a very wide range change in the stock price. Just keep the rest of your position and wait for the next day's opportunity. The 6th case is that the stock price opens around the previous closing price, which is within $3, and it forms a top reversal shape, which is like an A shape after the market opens, which is an uptrend followed immediately by a downtrend to the opening price. Please notice that this shape is formed only if you see that it has reversed back to the opening price. If it's just a little retracement, then you will still maintain a bullish outlook and will not change your strategy. There are 24 occurrences out of this, among which 11 out of them closes with a much lower price, and 13 cases of them closes with a price higher than the opening price. Please take a look at the 11 cases that the stock ended up closing with a much lower price. We see that something in common is that after they form bottom reversal pattern. No, top reversal pattern. The a lot of them struggles at the previous day's closing price. So this is really you really want to test your experience and your strategy. So during most of these cases, it can be a bearish event, and if it's gonna climb back, it's not gonna it's not gonna struggle at the previous day's closing price. This means that this is just their resistance level. This is not their if it's still a bullish event, then it's gonna immediately climb back from a dip. Also for these cases, so please notice that after they form a top reversal pattern, they didn't go straight down to the lowest price of their trading day, and which leaves you some time and some opportunities to stop loss or to exit your trade. So please use your own experience to determine if the trend can reverse. But however, since in most of these cases the uptrend is very tiny comparing to the major downtrend, so I believe most people will sell their asset if they see this to happen. If they see this to happen, since none of them they see an uptrend returning back to the opening price, or even to the highest point, or even to the previous day's closing price. So all of these tend to be very weak. And we are definitely selling our asset as soon as possible. Especially for this, if it closes, if it opens at a little bit below the market, below the previous day's closing price, it goes up to the previous day's closing price, and for just maybe several seconds or 1 minute or so, it then drops back to its opening price and lower. But however, in this part, in this trend, it can be followed by some gradual uptrends. It can be followed by some small uptrends. But please remember that these uptrends are just fake ideas, and they're used to confuse people. As long as it doesn't rise to the opening price, as long as it doesn't rise to the opening price, you are definitely want to sell your asset as soon as possible. I personally experienced a lot of such cases where the stock ended up drop a significant amount. You see that this is almost a 2.5% drop in the share price, which is considered a significant loss event for a stock with volatility like Amazon. Please make sure to stop your loss as soon as possible if you see such pattern to happen. And please also take a look at the 13 cases which the stock prices closes with a higher price in the opening. Please take a look at how these behave. Something we also notice is that in these 13 cases, the stock is also trading in a pretty small range. The largest the largest amplitude in these 13 cases should be should be this case, which it goes up to 802 and then drops back to 792, which is about a 1.25% change in the overall amplitude. However, this is very instant and this is very instant. So if you consider these two parts, it is less than about 0.8%, which I believe a total decrease, a total retracement about 0.8% is considered pretty common even in a bullish market for the Nasdaq stock, for Nasdaq index, or for a stock like Amazon with similar volatility to Nasdaq. So this is pretty common, and it is not especially bearish, and you can expect the stock price to climb back and gradually close around this previous day's closing price. Okay. Please take a look at these 13 stock trends. So for our strategy for this case is that this is a case which you definitely need to apply common sense about volatility and other properties of the stock to make judgment. If you will need to know to what price level the shares dropped is considered a major disastrous day for your underlying stock, and what should be just be a common what should just be common in a volatile day, or just a retracement in a bullish day. And you must keep this stop loss level in your mind. To what level that the shares drop is considered not okay, and you will definitely want a stop loss. Please make this stop loss in your mind and take actions immediately if you see this happens. For example, in these certain cases, where the stock prices closes higher than opening price, and none of them trades at more than $6 below the previous close price. We can see this higher, and for these cases, none of them trades at $5 below the previous closing price. $6 is too much. I believe this one dips the most. It's about $6, but you see that it's very instant. And for others, the most amount it dips to below the previous closing price is about $4. So it's about 0.5%. So according to my experience, for Amazon stock and for Nasdaq index, more than 1% retracement from the peak, or 0.6 to 0.7 level below the previous closing price should be considered uncommon in a simply volatile or a bullish day. If you see that a dip more than this level has occurred, then please make sure to stop loss and to wait for the next opportunity. Since you can wait for the stock price to go back, but for a very large probability that a major event has happened and the stock price has experienced an irreversible loss, and you would definitely want to stop loss. So that's why we say that if you trade options, we definitely want to trade options with very high liquidity, traded with the companies you know, and you not only know about the company's news and products and information, you should also know about their stock prices behavior, know about their volatility and their trend in the recent days. So if you are trading options, definitely avoid doing it on something that you just find to be fancy or you just find to be interesting and fun to do. You're definitely doing it with your old friends. You're definitely doing it with the old friends of everyone. That's why liquidity is so important, and and being open to all information and being open to all kinds of information and news about this company is also important. The seventh case, and the last case, is that the stock price opens around the previous closing price within $3, and you can see very tiny movements in the first half an hour. The amplitude is can be less than $2. There are 6 occurrences in this part, so this is a very uncommon case, and we can see that during the first half an hour or even about 2 hours, more than 2.5 hours, this is about 1 hour, and this is about 20 to 25 minutes, and this is about 40 minutes. So even though this is 20 to 25 minutes, is considered a pretty long time. So the stock prices stays within such a small range at for such a long time, then what we can do is that we don't have much things to do. We are definitely only holding our asset and wait for the things to happen. So it turns out that among these 6 cases, 5 of them experience a major uptrend, and it closes at a much higher price than the previous day's closing price. No, than the opening price. Okay, than the opening price. Then this case should be not too bad. And if this happens, if this case happens, it is quite rare. Since it experienced a resistance level in all of 853, 850, and 848. Then you will have some opportunity to sell some of your asset in 850, and if you are firm that the stock will not go to below 848, then you're adding back your position at this part. So it turns out that you can be successful, and by the time the market closes, you can even have a positive profit. And it turns out that this is about a 0.8% decrease from the previous day's closing price, and this shall not be considered a major loss event for the emittent stock. So, for this case, none of the there shouldn't be some big things happen. Just keep your stock and use your judgment and wait for the good things to happen, which is quite likely to happen. Okay. So there are another 12 graphs that are highly random, and from my experience, I'm unable to classify it into any classes. Oh yeah, for this one, it can attribute to our previous case, which is it moves within a very small range for quite a period, and it climbs up. We are waiting for this, and we might sell our asset at this time, or we want to wait it to decrease in amount and see that it has a weak trend, and we sell it at this point or at this point. Yeah. So overall speaking, for these 12 graphs, it is quite unpredictable. This should be one of the most unpredictable graph among all my among all of this analysis. It moves within a $5 range for about more than 40 minutes and climbs to very high level and ended up closing with more than with almost a 1.5% gain. This is very rare and nobody expects this to happen. But however, since it moves within a small range, we're keeping our asset and till this point, and we can expect good things to happen. So something besides this graph, for the other graphs, we can see that all of these stock prices moves within a small range, in relative to the stock price and in relative to the volatility. So I believe none of them can give you a big impact on your portfolio value. But however, if you see that some major trend reversal pattern has occurred, you can definitely apply it using your knowledge and make your judgment, and such as this double top pattern to the previous day's closing price, or even you can determine it at this point, since it goes up and cannot go higher. And for these cases, we might suffer from a little bit of loss after about 3 p.m. in the market. And these cases are quite unpredictable, but this is the nature of the stock market. Even if for the most experienced analyst, you can not make a sense of everything the stock market is doing, even if you are already so familiar with this stock. And luckily, in my presentation, we are able to classify most of the stock patterns, and we are able to conclude a strategy, then how you can profit from all of these strategies from after you see the opening price and when you see the initial trend, you can at least not suffer from a loss by applying these strategies. And in most cases, I believe you can make profit, since this is already 8 months of stock of Amazon, which includes more than 180 trading days. I believe this can be a pretty representative idea of how many what you can see in a daily stock pattern. I believe, based on my own experience, I've seen most of these stock patterns in my own experience, and for the most cases, if I backtest, if I rethink about what I should do if this or this happens, the strategies concluded from this presentation can be quite reliable. But however, predicting or even guessing the stock trend in such a for intraday trading can be very complicated. And even if somebody do this as their PhD thesis, this is still worthy. You can, even if you take 5 years to study this subject, it is still worthy. And since it is so profitable and it is and you can see the profit within such a short time, and you can consistently apply this algorithm to almost doing anything in the stock market, as long as it's positively correlated with NASDAQ or some Dow Jones index or etc. But however, please always make sure that you are trading the market trend is correct, and you are not in an especially volatile market, or especially disastrous market, and you are always trading with small positions for each underlying asset. Although I'm using Amazon as an example, I'm not suggesting everyone to purchase Amazon, Google, or Facebook stock. Although they have high liquidity, they also have some cases that can bring you some significant loss. So, but however, for option traders, picking a stock that is bullish and with high liquidity and with open, very broad range of news is definitely a good choice. So I hope this empirical analysis can benefit for you in your future intraday trading and your future short-term trading. And please, I would continue to research on this topic for in the future, maybe using clustering algorithms from deep learning and develop neural networks to better able to let the computer classify the stock trend. So in this case, I can analyze a greater amount of data and can make our decisions to be more reliable and more profitable. So this concludes my presentation, and please leave any comments if you have, and please if you have questions, also please ask me. And in the next time, I will be presenting a topic that I've always been researching for almost 2 or 3 months. That is, since I always trade options, I want to clearly understand how different options of a single underlying asset behaves differently. Since sometimes I see that even though in the last week of the trading day, some in the money and out of the money options behave very differently. Some of them move with the stock price very often, and some of them with less often. For example, some call options, even if it has risen to the previous closing price, it didn't go up to the stock. Didn't go up. The option value didn't go up to the previous closing price. But however, for some other options with the same expiration day and a single underlying asset, it goes back to the previous day's closing price. So this can be very interesting, and I've already done some research on this part. It is not mainly explained by mathematical models, but I would also present it with more empirical analysis, since it can represent some real money, and we all like to see that. That's why I wanna get deep into research about these topics, and hopefully you can be successful in the trading, and good luck. Thank you.